Hello everyone, you're welcome back to my channel. Um, if you are ever wondered how to identify profitable real estate investment before putting your hard-earned money into it, then this video is for you. On today's episode, I'll be walking you through step-by-step guide to spotting the right properties, whether you are buying land, you're buying house, or even rental property. So by the end of this video, you will know exactly what to look out for and mistakes that you have to avoid before buying that property. So we go straight to the point right away. So what are the form of the step? The first step you're going to check is location, location, location. So the first and most important factor is location. Yes, a profitable property is always a demand. So you look out for proximity to schools, hospitals, marketplaces, transportation, areas with ongoing infrastructural projects. Those are all some of the things you need to look out for. Places with new roads, railways, airports, safe neighborhood with growing populations. So remember, a bad property is a good location, often outperform properties in bad location. Let me take that again. A bad property in a good location often outperforms a good property in a bad location. So you must make sure that location is paramount when you want to buy your real estate. As I said, be it land, be it house, or be it rental property. So location, location, location is your number one point to look out for. Then number two is what? Market research and trend. Market research and trends. So buying property, study the market. Ask questions like, are properties priced in this area going up or they are stagnated? Is there high rental demand? What kind of properties are selling quickly or developing fast in those areas? So you can use online platforms. You can talk to agents. You can check recent sales to see if demand is increasing in that area. So these are some of the numbers. Second thing you need to look out for: buying research, market research and trends. So check out in those areas, what are these statistics that I just mentioned, what are they saying? Are the prices in the areas going up, or are they stagnated? Is there a high rental demand in the area? What kind of properties are selling in that area? So you should know whether is there commercial properties, is it rental properties, is it agricultural properties? So you must be able to make those research. As remember, I said you can use platforms, go online. Now with the help of some AI, some intelligent AI tools, you can be able to decipher that. You can even ask trusted agents like us, professionals like us. We can be able to guide you on that. Then number three point you need to look out for is return on investment. So numbers don't lie, remember. So to know if property is profitable, calculate the return on investment. For rental property, it's usually calculated as the annual rental income divided by the total property cost times 100. So you just do that simple calculation. You should be able to know if the return on investment on that property is going to be high. So for land, compare the purchase price with the projected future value after development. So a good return on investment is in most markets is between 8 to 15% annually in most markets. So if you do your calculation, you find out that your good return on the ROI is between 8 to 15% in most markets across Africa, across Europe, United States, United Kingdom, Canada, Australia. So you have all these things. So once you make those, you check your return on investments, it lies between the figure of 8 to 15%. I'm telling you, is most likely a good investment. So check the return on investment in such property before you invest. Then number four is that development and growth potential. So ask and always check, sorry, I beg your pardons, always check the future potential. Look out for areas with approved government layout or urban master plan. So look out for such properties. where you know that the government already have future plan for it. So always look at for such properties. Upcoming industries, schools, or commercial hubs, are they all going towards that area? And signs of population growth. So these are some of the things you need to watch out for. So buying before major development happens means you can benefit from appreciation when others rush in after. So you must be able to check out those information. As I said earlier, that there are platforms you can be able to check. Some smart, intelligent AI tools can be able to give you those, statistics. So before buying, do all those necessary checks and investigation. You can always reach out to us and we'll give you such information. Then number 5 step is that legal verification. Even the best location is useless if the property has legal issues. Always verify titles, surveys, approvals. Make sure you are not buying government acquired land or property tied in a dispute. So legal verification is always something that you must be able to do before you invest in real estate, no matter the location. So across Africa, Europe, UK, United States, Canada, Australia, China, wherever you have it. So legal verification is very important. Number 6 is that risk assessment. Every investment has risks, but smart investors reduce them. Ask yourself, what if the property doesn't appreciate as fast as expected? What if rental demand drops? So what's my exit strategy? Always prepare for the worst. Why hoping for the best? Always prepare for the worst while hoping for the best. So make your risk assessment before you go ahead to buy such property. So if you found this helpful, don't forget to like this video, subscribe to this channel, turn on your notification bell so you don't miss my next real estate tips. So drop a comment below. Which of these steps do you think is the most important when spotting profitable property? I would love to hear your thoughts. So thank you for watching today's episode. I see you in the next one. Bye bye.